Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 27th of February. The information covered this evening is general advice only. Investor Signals offers a Getting Started service, which is a subscription to our advisory membership. So with that you get access to our member logging, which includes access to the daily ASX opportunities. So every morning at 11 a.m. you receive an email with a notice of the trades and investments that we're focusing on, and part of tonight's recording will be to review those recent opportunities and also share with you some ideas to focus on going forward in the market. Part of this advisory membership also includes access to our index analysis, which is the XJO and the S&P 500, which is the index trading service, and we'll begin tonight's analysis with a look at the recent commentary on the index trading. Our ASX model portfolio tonight will be focusing on the ASX 50. The recent new addition to the technology or to the member area, which is the ASX trade table, which captures short-term trading, as well as phone support. And you can subscribe to that advisory membership for $110 a month. So please feel free to call me in the office or email if you'd like to take advantage of this special offer. The Platinum membership is a full membership which incorporates our mentoring courses and access to the charts, indicators and the full package. The mentoring courses are an important building block, especially in the context of separating your trading from investing. A common mistake is that I see clients enter what are short-term trades and they later become long-term investments. So separating your trading from your investing is a critical component of our mentoring, and then making sure you have the right skills and understand the setups both for short-term trading, entry, exit, stop loss, and then longer-term investing, the methodology that's required to deliver good results for long-term investing. So the mentoring courses help guide you through sort of those foundation education components, and then once we've done that we start to focus on areas of sort of special interest, which could be options, maybe US equities, it could be using leverage, it could be using AI or automated trading, it may just be simply looking at enhancing your returns with ASX stocks. So we work with you sort of on a one-on-one basis with the mentoring as part of the Platinum membership. We've got a special offer in February, so the Platinum membership's normally $6,890. In February you only need to pay down 50% of that, and then the remaining 50% is only payable if at the end of 90 days you profit from the trading ideas that we've presented you are not greater than that second payment. Then we waive or void that second payment. So 50% down to start that Platinum membership, which incorporates access to those mentoring courses. So a couple of options there: either joining as a advisor, joining the advisory service for $110 a month, or taking advantage of the full Platinum membership. So for more information on our products and services, please visit the website. And again, feel free to call me in the office. As a reminder, if you find you're simply just too busy to place the orders yourself, we have a personal investor account service where I act as your broker or advisor and place the orders on your behalf. So again, if you'd like to discuss that, please call me in the office. Now, to frame tonight's discussion, we have clients joining us for the first time as part of our public webinar. So we break the discussion up into opportunities for your investment portfolio, which are a combination of our algorithm signals supported by fundamental analysis, where we're looking for growth at a reasonable price, taking into account earnings, dividends, current forecast revenue and earnings analysis, thinking about the debt and gearing levels, whether the company's conducting share buybacks, etc. And that fundamental analysis helps us to determine the weighting to a particular stock in the portfolio. The way that we approach investing is to identify value ranges and to accumulate our position within those value ranges. Whereas momentum trading, this is something we're looking across a much shorter time horizon, so we're looking at days and weeks with momentum trading. requires a disciplined approach with stop losses. One of the tools that we utilise to assist with momentum trading is the pivot point table. I'll touch on that briefly as we go through tonight's recording, and the new trade table screen, which this helps just to automate the process, giving you the entry, exit, and now the stop loss highlighted in there as well. So we'll touch on that at the end of tonight's recording. As far as the commentary tonight, you may hear me reference pivot low and first test, first fail. So pivot low is a reference to the point where the rally began, and the first test, first fail is that higher level of support level that we look for, where the price rallies, pullbacks, test that, and we see buying building on top of that first test, first fail. Index trading, so every week I update on the blog or on the member portal the analysis around the index. Now this has been extremely successful, so thousands of dollars have been made in a very short period of time through following this index trading. This captures the most recent post in the members area, so the signal here on the S&P 500 and very similar on the XJO, and we'll look at these charts in a bit more detail in a moment. But the highlighted section here just suggests we remain on the short side of the index trade while the close is below the 10-day average. So the original setup here was the red arrow, the close below the average, the sort of first test, first fail in reverse, in that the market sold off, rallied up, created a lower level of resistance. And then whilst the price action has been below the 10-day average, we've been on the short side and continue to hold the S&P 500 in the futures market as an index short. Bear with me there and I'll bring that back into perspective there. So the S&P 500 index trading, we cover both the XJO and the S&P 500, and that's all part of your subscription service. With that, let's move straight into a graph of the S&P 500 and the XJO, and we'll talk about these index positions at the moment. So as we just looked at, we had the red arrow, the close below the moving average, and we're on the short side of this index, and we'll stick with that until such time as it reverses back above this 10-day average, and at that point we'll shut out the short index exposure. So as a backdrop, when we're recognising that the index is under these short conditions, you naturally have a slightly more cautious approach to entering new equity positions. Part of tonight's focus will be to highlight the names that we have been taking positions in on the long side of the market, and also flag the opportunities that we see approaching. As far as the target on the downside for the S&P 500, we're really just going to let this sort of trade until it crosses back above that 10-day average. But I just flagged that we have created the higher high here, so there's a good chance that we start to see some buying interest pick up at roughly 50% of this move. So we're getting down to that level at the moment, so we may be getting close to where we see a little bit of buying interest starting to rebuild in US equities. If we have a look at the pattern on the XJO, similar, made a higher high, so but red arrow there, closed below the moving average, and we've been on the short side of the XJO whilst it's been trading below this 10-day average. Similar situation where it's almost retraced 50% of this movement here, and we'd expect to see some pause in the selling at around this level, so we'll continue to monitor that, but we stay on the short side as long as the price action is below that 10-day average. Let's have a review of what's gone on the blog in the last 7 days, so since the last recording. So just highlighting this week in the US, some earnings results there to focus on. Scrolling back through, so this morning I posted about BHP, so this has shifted from sell conditions, which is the red box up the top, into buy conditions, which is the green box there, and I've highlighted a value range which flags $42 to $45 as accumulation area. So we've added BHP into our investor portfolios, but we've started with a small position, and I've just highlighted there that exactly that we've added a small amount, but we're mindful not to build an overweight position too soon, and that's really reflective of the resources being an area of the market that we're seeing some profit taking at the moment. Santos, so first test, first fail, so this is just a look at can this pattern hold. And for shorter term traders, the suggestion here is to be on the long side of Santos with a stop below that pivot low, which is 674. So this is all part of the advisory service that you'd be getting access to as a subscriber. Brambles, so I've been bullish on this really since about $11, which is when it shifted from sell there into buy conditions. We've had these higher lows, which I've just highlighted here. It's now under red arrow, so it's not. I'm not suggesting that you chase this at the moment, but it's certainly a stock that you'd be willing to buy on any weakness. So if we saw a pullback to around $12, we'd start to add that in again for clients that don't already hold it. But for the most part, our clients have a decent exposure to Brambles from around this $11 level, and the stock's up about 20% since that entry. The XJO and market direction, I think I've covered enough on that, but that just, it is the blog posts, or the member post that you'd be getting access to as a subscriber, and that short position's been very profitable, as has been the S&P 500, same setup there that we looked at earlier. So that's just the actual time-stamped analysis around that. On the ASX, think about the iBuy fund, which is a fairly new listed ETF. It's a beta shares product, captures exposure to global online retail and e-commerce. The correction here from 1050 down around this 930, 940 level is a buying opportunity, and we're starting to accumulate that and build up our exposure there. Aristocrat Leisure, I like this. The longer term fundamentals support this moving higher, so buy with a stop loss at 35. Hopefully you already long this in your investor portfolio. We certainly are in client accounts. But the recent post was just that this small pullback here and test of $35 was a buying opportunity, and just reminding you to look to add that if you don't already own it. Block this as a growth opportunity. The correction here from 125 back to 100, we see that doing better over the next 12 months. Santos, I've already covered that. Moving back through the older articles, again, we're just backtracking 7 days here. Elders, this is a very small position that we're looking at the moment, and it's really one that we've just added to our watch list, but just checking to see whether it can hold this support level there at the moment, and I'll update you further on the blog with my thoughts on that. Amcor's been one of our high conviction ideas. We've been strong buyers of this. It's moved up in the weighting in portfolios. It's now sitting at about top sort of 4 or 5 position size allocations. We've seen this rally hard off the $16 support, now trading $17. Fair value for this is back up around $17.50 to $18, and I think ultimately ends up breaking up to new highs and retesting sort of that $19 to $20 range later this year. But at $16, it's a buying opportunity. S&P 500, and then there we are back to last week's webinar. So with tonight, what I want to do is run through the ASX top 50, and then we're going to jump in and just have a closer look at everything that's gone on the blog over the last 30 days, and we can do that via a watch list, so we can toggle through them fairly quickly. But first, let's jump into the ASX top 50 and have a look at, I'm going to do this in reverse. So what we're going to do tonight is actually look at the stocks that are underperforming and are not in the model at the moment. So what we're doing here is looking at the worst performer today at the top, and we're looking at whether it's under a sell signal. So we're going to go through all the stocks under sell first, and then we're going to get through to the stocks that are under buy, and I'll finish the top 50 with a focus on those that are in the portfolio. So let's start with Fortescue. And the reason why this is under sell conditions, the red marker's up the top here, it's under red arrow and rolled off that resistance level there, and it's below the moving average. So we're not doing anything in Fortescue at the moment. We're not doing anything in Mineral Resources either. What we're waiting for is these to switch from sell conditions back into algorithm buy conditions. So something around that $65 level there for Mineral Resources would be an entry opportunity. Centre Group, not doing anything there, that's on the short side, as is Rio, so the red sell condition, the red arrow, and it's rolled over under that resistance. So what this green arrow really means is it's our first warning that the selling could be ready to exhaust, but they're fairly short-term signals. From an investor standpoint, you're really waiting for this red signal to shift back to a green signal, and we'll see that in BHP as I move through. But for the moment, what we're focused on is these resource stocks under resistance, they're under sell signals, and the price action is below the 10-day average. So it's just a little too early to chase after these in an overweight allocation at the moment. So a little bit cautious on the resource sector. Likewise here with South 32 rolling over below resistance there, and price actions below the 10-day average and undersell signal. Now Xero is an interesting tech recovery play, and we're looking for this to break out later this year and create new highs. Well, when I say that, not back above this 150, but to take out. So over the last 18 months we've had a series of lower lows and lower highs. We're expecting that to sort of exhaust and a new recovery uptrend begin to develop there in Xero. Goodman Group under resistance, not doing it there at the moment. Mirvac under resistance and sell signal, so not doing it there at the moment. James Hardie under sell signal, so what it's been flagging there is the lower lows, lower highs. If we look at Stockland, under sell signal as well, so not doing it there. Seek under sell signals. Seek may very well shift back to buy signals, so if we see a sell-off in the coming months in Seek back down around $22, we'll probably see that shift to buy signals. Medibank under sell signal, not doing it there. Dexus under sell, QBE under sell, ResMed under sell, Suncorp, Endeavour Group, all under sell. Sonic Healthcare been making lower lows, lower highs, but starting to show the early signs of consolidating. The earnings result was better than the market expected. The stock jumped from 28 up to 32 off the back of those better earnings results. And so I think this is a name that we'll see shift back to buy signals in the coming months and a new uptrend develop there. GPT, not doing there at the moment. Ramsay. Despite this being under sell signals, we're of the view that the sale of the European, in particular the French hospital business, ends up clearing the way for possibly a takeover bid to be resubmitted for Ramsay. So, watch out for that throughout this year. We expect further commentary around that takeover potential there for Ramsay. Wesfarmers, extremely high quality business. Any weakness here, we're a buyer of that on the dip and looking for that to shift back to buy signal. Not doing any APA, not doing any Macquarie, not doing any Newcrest. I'll talk about gold a bit more in a moment. Woolworths under sell signals at the moment. BlueScope under sell, Transurban under sell, Cochlear, Westpac is under sell, NAB, Qantas is under sell. And then here we go. So now what's happened is we've moved through all the stocks under sell. I just wanted to sort of share with you a bit of the background there from the top 50 model, which ones are under sell. Now the focus is stocks that are under buy conditions. So these have originally been added into the model portfolio from them shifting from sell into the first buy signal. And you obviously can get subsequent signals, and clients may choose to add to their positions off these subsequent signals, or they may take advantage of shorter term trades. But from the model portfolio, which we'll look at the performance at the conclusion of reviewing this top 50, the model portfolio is based on the switch from sell into buy and sticking with the position as long as it remains under buy conditions. So once the price action rolls over, you'll then see a switch to sell and the stock will be removed from the model. BHP's a new signal. So what we've had here is this first switch from the sell signal up the top to the buy signal at the bottom. 50% of the range there from BHP is roughly $42. So we're accumulating BHP within this $42 to $45 range as our value range. So it's starting off as a very small position inside our top 50 portfolio, but as deeper value there presents, we'll start to increase our exposure to BHP. Now Northern Star, this is our preferred gold exposure, and the correction here from $13 back to $10 starts to bring it into a price range where if you don't hold it, you could certainly start to think about adding this to your portfolio. So the algorithm buy signal is alerting us to the correction here. We have higher highs, higher lows. This becomes the value range where you should be starting to accumulate Northern Star within that sort of 875 to 1025 range there. So again, if you're looking for gold exposure for your investor portfolio, Northern Star's an accumulate within that range. Santos down here on support at around $6.75, so we're buyers of that. If you're running short-term momentum trades, what you're going to be focused on here is the first test, first fail, and looking for the price action to start to swing higher. And one of the ways of doing that would just simply being patient, waiting for Santos to get above that 10-day average after testing this higher support level. Again, the stop loss goes below that pivot low. So that's starting to zoom in a little bit more, think about the market from a shorter term trading standpoint. That's the type of trade setup that you would be looking at. But certainly from an investor standpoint, it's gone from sell conditions into buy, and we own Santos in our portfolio at around that 675 level. Insurance Australia starting to build a new uptrend, switch there from sell conditions into buy conditions, looking for this 450 level to hold, and Insurance Australia Group to progressively develop a new uptrend throughout the course of this year. Treasury Wine's been one of our better performing stocks in the model, switch from sell conditions there into buy. We've had these subsequent buy signals. Our strategy here on Treasury has been that the price action was likely to break to the upside, and we're now expecting it to build support on top of that old resistance level there. So $12 becomes the new support. This pullback creates a buying opportunity if you don't already own Treasury, somewhere around sort of that $12.50 to $13 would be our buy range there. Aristocrat Leisure, switch from sell conditions there into buy. We're looking at double-digit earnings growth here for Aristocrat, and ultimately we see this stock breaking out of this consolidation range here at around $37, $38 and pushing back up through that $40 level there. So Aristocrat we certainly like and have a position in that in our portfolios. Brambles, switch from sell conditions there into buy. So that was at around that $11 level that I was talking about. We've had those higher levels of support there. And as I discussed on the member portal today, Brambles is delivering earnings growth between 12 to 14%. And reaffirmed that for the full year outlook, which is very attractive relative to some of the other areas of the market, which are certainly or companies that are just not growing earnings at that same clip. So Brambles, be a buyer of that on any weakness. CSL, the correction here from 315 down to sub 300. Our target here is to accumulate CSL for clients that don't own it at around this $290 level. You can see here the switch from sell into buy conditions that was added into our model portfolio in sort of around that 270 level, and it's now trading higher. The pullback creates another entry opportunity for clients that don't already own it. Telstra grinding higher has been our message to clients, and to stick with this. It's gone from sell conditions into buy conditions. The combination of reasonable earnings growth, high single-digit earnings growth, and corporate action around the sale of Infrastructure Co, or at least 50% of Infrastructure Co, gives us confidence with sticking with Telstra. And again, it's a stock that any weakness, I'd encourage you to consider adding that to portfolio. Coles Group, switch from sell there into buy, and it's in our portfolio. Support there at around $16, back up near resistance where it is at the moment. We'll be looking for a deeper pullback, maybe back to around $17, and a new buy signal there for clients that don't already own it. ASX, mindful that we've got low revenue growth and therefore low profit growth. The stock's largely a 3.5% yield play, 100% franked dividend, really consolidating where it is at the moment. In a stronger market, could trade up to sort of $70, $75, but don't see it doing too much more than that in the short term. ANZ switched from sell conditions there into buy. We hold this in our portfolios, as we do CBA, but we have a very small exposure to CBA. Our larger banking exposure is ANZ. And Commonwealth Bank, as I mentioned there, from sell conditions into buy, so we've had the signal there. This becomes our value range to build a larger position in CBA, which is sort of from $85 to $100. So a retest of that lower level there sees us get a bit more aggressive with the position sizing for CBA. Origin Energy has performed very well, so the switch there from sell conditions into buy, originally at 460, and then again a subsequent signal there. That's 675, now pushing up to 815. Woodside Petroleum switched from sell into buy there at $20, and another subsequent signal here at around 33. So where we see support for Woodside is around that $33, $34, and expect it to trade higher. Amcor, so this is the one we looked at earlier, so the switch from sell conditions into buy, subsequent signals there. We see deep value there at $16. The stock's now pushing up towards $17. Our target here is to see this up at around $18. Computer share, so this higher US interest rate, stronger US dollar, we're seeing some buying in this, but we do think the stock's getting a little expensive. It was originally added into our model back in 2020, so it switched from sell conditions there into buy, and the subsequent signals have performed quite well. And there we are, back to Fortescue. So let me just show you a review of the performance of that top 50 portfolio. So we come in here to the model portfolio, select the model that we're interested in. If we want to get notified when a stock's added or removed, you simply turn on these notifications. The way that I like to arrange this table is days held, so to get the stock that's most recently been added into the portfolio. We can see here that BHP was added 3 days ago. Commonwealth Bank's been in there for a short while, like we discussed. Aristocrat, so moving all the way down, you can see the stocks in here. They've been in there for a year and a half, 2 years. Now, that investor portfolio is really about months and years, so it's identifying momentum across months and years and sticking with it. It incorporates your dividends, and you can go back through here and have a look at the historical performance of it, and the strategy's done very, very well over time. So you can go through, have a look at all the win-loss ratios, etc. That's the top 50 model portfolio. Now let's just move through these quickly, and then I'll finish with the trade table. So what I wanted to do to finish tonight is just broaden the opportunities to think about outside of the top 50. So I'm just going to click here on recent blog posts. We'll get the percentage gains to the top. We'll just focus on ideas under the buy conditions at the moment. And some of these we've already touched on, but the iBuy ETF, so exposure to e-commerce, so the area of the market's quite oversold at a global level. So Block is a technology play, so we like that. Amcor, I think I've kind of covered enough on that. Origin Energy. So these are all ideas that have been expressed in the member portal over the last 30 days. And some terrific profits and gains have been made on these stocks. Some of them are at points where you could take action on now. Others that the rally's already sort of underway. So Origin Energy's already jumped from $7 up to $8.15. This one here, the Dow Jones, this is our preferred way of capturing exposure to property at the moment, is the DJRE, which is the Spider Dow Jones Global Real Estate Fund. We just feel that this is oversold, so being a buyer of this at around that $19 level there. CBA, small allocation there to CBA. We think that could have further downside before you'd want to build into that position further. This particular ETF, this is a global exposure to quality leaders. We see this as offering value from a PE standpoint and reasonable growth outlook. So to broaden our client portfolios with global exposure, we're using this BetaShare ETF. Global healthcare, likewise here, we feel that there's value being presented within the healthcare sector, so you can either think about it through the IXJ, which is an iShares ETF, or through this one, which is a VanEck Vector Global Healthcare Leader. So this one's corrected from 13 down to 10, captures exposure to a cross-section of global pharmaceutical companies, and we see that area of the market as somewhere that value is starting to emerge. So having an exposure to this is one way of taking advantage of that. Elders really just on the watch list at the moment, not doing too much there. Tabcorp at around this dollar level. I think there's a trading and a potential for some allocation in investor portfolio there to Tabcorp at around that dollar mark. Brambles, we've really covered that in a fair bit of detail. Aristocrat, I like that, and I've explained the reasons why. Vicinity, not doing there at the moment. Incitec Pivot, not really doing too much there. Santos at around this 675, you want to have a think about that. Northern Star starting to pull back into that value range, so that's something you should be definitely scratching down on your notepad. BHP, the correction there, maybe down to around 42.50, we start to build that position size. Gold Road Resources, along with Northern Star, Gold Road at around this 130 to 140 levels into our value range. Sonic Healthcare, expecting that to continue to trade higher throughout this year. Lendlease, this is a counter trend trade, so obviously property and in particular property developers are out of favour at the moment. We've seen Lendlease really struggle to sort of keep positive numbers on the boards. At around this $7 level, one of the ways of getting upside exposure without taking, or at least limiting your downside risk, is to buy call options. So with Lendlease back at this $7.50 level, start having to think about the $8 call options. Star Entertainment, same thing here. One way to play this is the call options, but we think Star could be a recovery opportunity, as is the case with Xero. We think that could be a recovery opportunity in 2023, and there we are back to iBuy. So that's just a review of what's gone on the blog in the last 30 days. As a subscriber, obviously you can have a discussion with you about those opportunities in more detail. And then finally, I just want to finish this evening with a quick look at the pivot table and the trade table. So the pivot table, the idea here is that you're able to look at both long signals and short, and you can toggle through these. So if you're trading both sides of the market, the pivot table is a really important tool used by our momentum traders. The trade table, we take this a little step further and we start to automate the trading entry levels here. So for example, Virgin Money was a new buy signal just added today, and the stop loss goes in at 304, and you can see there sort of the outcome of the recent trades there in the trade table. If you'd like to know more about the technology and set up a free trial, please visit the website. On the home page is a link to the free trial. If you're ready to have a discussion with me about either our getting started with our advisory membership or jumping straight into the platinum membership, please give me a call on 1300 614 002. And thank you for listening, and I look forward to seeing you join our weekly webinars as part of your trial, or better still as a member. So thank you again for listening in. I look forward to speaking soon.